Okay, well, let's get some global perspective in. We have Chetan Sheth, equity strategist at Nomura, who's joining in. Chetan, great to have you with us here. Good morning. Thanks for your time. Now, it looks like maybe except the market here in India, sentiment around the world, even in some of the better performing markets, is cracking a little bit or lately has been a bit fragile. No such problems here in India, Chetan. Your thoughts on sort of the sentiment out there in some of these better performing markets?
Yeah, actually, that's absolutely correct. Actually, if you look at since 10th of July, when we got the US soft CPI, I mean, there's been a bit of a rotation in the markets, and what's happened at least in the global markets front, especially in the US, we've seen tech stocks actually underperforming, some of the small cap stocks actually outperforming, and overall net market is actually down because the weakness in the tech stocks has been a bigger force than the outperformance of the small cap indices in the US. And similar thing we've also noticed in some of the large tech heavy markets in Asia, such as Korea and Taiwan. And as you rightly said, India has been, I would say, what I say is very well behaved that way. So remains to be seen whether some of the domestic flows and foreign flows start getting impacted in the next few days, which leads to some bit of softness in Indian equity markets as well.
Chetan, hi, good morning and thanks for joining in. So what is the approach now as we head into perhaps a period when most global central banks and our own central bank may begin the rate cutting cycle? How does one approach Indian markets, especially with the markets at record highs?
Yeah, so our multi-month view, at least towards beginning of November, which is when we have the US elections, our view is that, look, maybe you'll see a little bit of more positive momentum, over the course of next few weeks, once some of these big events that we have this week are out of the way. But as we approach US elections, I think volatility will likely pick up because there's huge uncertainty as far as what the US elections will hold out for markets. And I think that may also weigh on India markets. So if you just look at our index target from Nomura's India team for Nifty, it's 24,860, which is precisely where the index is. So which means that from now until end of this year, I mean, returns are likely to be muted, probably flat. But remember, that's a point in time estimate. We could potentially overshoot. But this week is huge. I mean, in the next couple of hours, we'll have the BOJ. Normally for Asia, ex-Japan markets, it's not a big event, but there's been a lot of focus on the unwinding of some of these crowded yen shorts, which potentially are also weighing on stocks. So that's huge. Then we have FOMC midnight our time or like early morning tomorrow Asia. And then we have the all-important non-farm payrolls. So these are the three key events which we need to keep an eye on. And once these events are out, assumingly there's no big surprises here, maybe the market can move back to some of the earlier themes.
Okay, all right. Hi, Chetan. Good morning. So India is at fair levels as per your, as per Nomura. But let's talk about the big events, the central bankers. What are you expecting from the Bank of Japan? There are reports that indicate they'll tinker around with the rates. And also with regard to the Fed, how many rate cuts are you all pricing in from September onwards?
Yeah. So as far as BOJ is concerned, I think it's going to be a very close call. As you may have noticed overnight, there has been some news reports, or you could call it leaks from Japanese media suggesting that the BOJ may actually look at hiking. Now, Nomura economists are not actually expecting a hike, at least in the base case. But there are, we're not ruling out a potential hike today. I mean, the most important question is what happens to the yen. Let's say if the BOJ comes out hawkish relative to expectations, and then there's further appreciation of the yen, i.e., some of the unwinding of crowded shorts. I mean, that may put potentially more downward pressure on stocks. I think so. The yen moves are quite important. As far as FOMC is concerned, our baseline view is it's not going to be a very eventful FOMC, but you always have to keep an eye on what the Fed has to say. Our baseline view is that this year we'll potentially see 2 rate cuts, once in September and the other one in December. If you look at the market odds or the market probability, I think pretty much the market is already pricing in September. I mean, the key question is whether Chair Powell gives us a clear signal on the September rate cut, and our sense is probably will not get clear signals. I think they'll just keep it open, and continue to reiterate that, look, we're going to be data dependent and it all depends on forthcoming data. But baseline view for us is September is when we can potentially see a rate cut from the Fed.
Okay, September is when we can potentially see a rate cut from the Fed. I think that seems to be the consensus view right now. Thanks a lot, Chetan. Appreciate your time here on CNBC TV 18. Well,